Good day everyone, my name is Joseph Baraza, and in this presentation I'll be showing you how to do question 11 to question 13. Now we've been given this information here that we will use in all the questions. The information says Cameron Camry operates a consulting firm called Help Today, which began operations on December 1. On December 31, the company records show the following selected accounts and amounts for the month of December. You've got cash, accounts receivable, office supplies, office equipment, land, accounts payable, common stock, dividends, consulting revenue, rent expense, salaries expense, telephone expense, and miscellaneous expense. In question 11, we are supposed to fill up the income statement. Now remember, the purpose of filling up the income statement is so that we can have a net income at the end of the period. Now to get the net income, we will need revenues and expenses, so that when we get the difference we can be able to get the net income. Now we need also to remember that the income statement is for a period of, and the period is between the December 1st and December 31st, so we say it's for the month ended December 31st. And on top here we need to first put the revenues, and then we'll later put the expenses and then the net income. Now for the revenues, we only have the consulting revenue. If you check through, the consulting revenue is 27,110. We put here consulting revenue, which will give us 27,110. Okay. And then since we don't have any other revenue, we go to the next item, which is expenses. So we fill in here, put here expenses, then under expenses we'll list all the expenses that we have in this information. So the expenses, we have the rent expense, salaries expense, telephone expense, and miscellaneous expense. So we'll start here with rent expense. So we've got the rent expense there, we've got the salaries expense here, then we've got the telephone expense, then lastly we've got the miscellaneous expense. So that is what we have, the information that we've been given here. Now remember, in the list we may have other expenses that are not listed, so we have to be careful to choose only the expenses given in the information. Now rent expense is 9,680, salaries is 5,700, telephone is 990, and miscellaneous is 610. So for rent we have 9,680, salaries we've got 5,700, telephone we have got 990, and miscellaneous we've got 610. Right, now that will give us all the total expenses, 16,980. This will help us to calculate the net income. Remember, this is the objective of the income statement, to give us the net income. Now if we get the difference between these two, 27,110 minus 16,980 will give us 10,130. 10,130. Now that will give us the income statement and the net income. Now remember, the net income, we will use it when we are calculating the statement of retained earnings. So we need to remember this amount. So let's just check our work to make sure we have done the right thing. Okay, check my work. Yeah, so you can see that the answer is complete and correct, and we have the correct net income. Okay, let us go to the next question, question number 12. So the question number 12 will still use the same information, so the information doesn't change. And here we are asked to use the above information to prepare a December statement of retained earnings. For help today, the retaining earnings balance at December 1 was 0. So retained earnings at December 1 was 0. So always check the retained earnings for the previous at the beginning, so that you can use it in the statement of retained earnings. So here we've been told it is 0, so we input 0 there. And now remember that the statement of retained earnings, it gives us the retained earnings at the end of the period of that time, because it was between December 1 and December 31st. So on top here we'll say it's for the month. Okay, so for the month ended December 31. So it's for the month, so we have to input for the month. If it's for the year, you put for the year. Here it's between December 1 to December 31. And then the statement of retained earnings, we'll put the net income. So this net income is the income that we got in the income statement, which is 10,130. So that is what we input, 10,130. So that will give us, and then we subtract dividends. So the dividends 6,120. 6,120. And then this should give us the retained earnings of December 31. It's at the end of the period. So this is the objective of the statement of retained earnings. It tells us how much the company retained at the end of that period. So we take the net income, we subtract the dividends, and it will give us the retained earnings at the end of that period. So we can check to see if we did this correct. Yes, so it shows the answer is complete and correct, and we have the correct information there. The net income less dividends, and we get the retained earnings. If we had a higher figure here, we would have added so that we can get the retained earnings at the end of that period. Now the last question, they want us to fill up this balance sheet with the information that we've been given. Now remember that the retained earnings at the end, retained earnings as of December 31st, we'll use this information in our balance sheet. So we need to remember the amount, the retained earnings at December 31. So in our balance sheet, we need to know that we need to use the balancing equation. The balancing equation will help us to calculate the accounting equation. Call it the accounting equation, which has to balance. So this one has to show us, so this one is the accounting equation. It says assets is equals to liabilities plus owner's equity. Therefore, we need to have our assets on our left side, and then we'll have liabilities and owner's equity on our right side, and therefore the equation will balance. Therefore, we'll start by putting the assets on our left side, and remember that the balance sheet is for a period, not a period, at a point in time. The balance sheet is at a point in time. Therefore, here we put as of December 31st. Now remember, the other ones was for the month between December 1 to December 31st, but this is as of December 31st, because the balance sheet, the information keeps changing. So this is as of December 31st. Then on the left side we put assets. On the right side we'll have liabilities and equity. We'll have equity somewhere here. We'll have assets equals to liabilities plus equity. Now on this side we'll list the assets. Now in our information we've got assets listed here, and then we've got the first one is cash. Actually we've got the first one is cash, second one is accounts receivable, supplies, office equipment, and land. I'll just put that information here. We've got cash, accounts receivable, office supplies, we've got office equipment, and then we've got land. Then for cash is 25,450, office accounts receivable accounts receivable 22,490, office supplies 5,370, office equipment 20,140, land is 44,120. Put that information here. For cash I have 25,450. Accounts receivable got 22,490. 22,490. Office supplies was 5,370. Then office equipment was 20,140, and office supplies 5,370. So we've got office equipment 20,140, land is 44,120. So you have to double check to make sure you've got the correct information from the information you've been given there. Now this will give us the total assets at the bottom here. So here we put total assets. That will give us the total assets. Then on your right side you put the liabilities. So the liabilities, we only have accounts payable. We put accounts payable here. The accounts is 10,460. 10,460. Then we've got equity. So equity includes common stock, which is 103,100. We've got common stock for 103,100. And retained earnings. So remember, retained earnings, you get it from the statement of retained earnings. So you have to check what our retained earnings were. So our retained earnings is 4,010. 4,010. So we input our retained earnings here. It'll be $4,010. $4,010. Now this will give us the total equity between the common stock and retained earnings. Then here we'll have total liabilities and equity. Total liabilities and equity will be 117,570. Now you'll notice that the total assets on this side equals total liabilities and equity. So you have to double check to make sure the account balances. This will give us the balance sheet as of December 31st. Now let's check to see if our accounts balance. There you have it. The answer is complete and correct. Alright, so that is how you calculate, that is how you fill the income statement, the statement of retained earnings, and the balance sheet. And you've noticed that in the income statement we were able to calculate the net income, and we were able to use the net income in our statement of retained earnings to calculate retained earnings for the month ended December 31st, and that was 4,010. And then we were able to use the retained earnings in our balance sheet around here, which gave us total assets which were equal to total liabilities and equity. Alright, thank you very much. I hope this information will help you to do your own calculations. Thank you.